Menon, the analyst IT services at Elara, who joins in with his expectations from what TCS can deliver later this evening. Just to give you the expectations from TCS this time around, we're expecting a dollar revenue growth of almost 4.2%. Remember, this is seasonally a strong quarter for TCS, for the IT sector in general. So they could see about a 4.2% dollar revenue growth. The margins, however, will continue to fall. So this time we're expecting margins of about 25.6% versus 27.2% earlier. And those are the factors that could impact the margins. Ravi, hi, good morning. What are your own expectations from TCS this quarter? And how are you positioned on the stock?
So I think I'm a little more negative than most people. So I'm expecting only 3.3% growth in dollar terms. I think that the key thing to watch out will be attrition. If it's below 10,000 in absolute numbers, I would be happy with that. If it's over 13,000, I think we would be greatly worried. Margins, we're expecting a 70 basis point decline QOQ, adjusted for the one-off bonus in the fourth quarter. So on this, I believe the wage cycle will be mitigated mostly through utilization improvements and the rupee depreciation. The 70 basis points is entirely due to FCNA investments. We think that there would be a little more investments in Europe and also in the US, as momentum is picking up in the US now.
So what exactly is the revenue growth you're going with?
3.3% QOQ in dollar terms.
Okay. And volume?
So, we are not really looking at volume numbers. I think TCS will stop doing that. But my assumptions are for 3.1% volume growth and 0.2% of realization improvement.
Okay. Since you are slightly more, bearish compared to the consensus view, which is 4.2%, what would your expectation be as it trickles down to the margin picture as well? We are expecting about 25% or so. How much are you factoring in?
So I'm looking at a 70 basis point QOQ decline in margins, all of which will be coming from FCNA investments. So I do not necessarily see that as negative. And this FCNA investment also includes, visa costs for the quarter, which is clearly a quarterly phenomenon we see in first quarter.
In terms of attrition, I thought you said a number of 13,000.
That's above which we will get worried about.
Okay. So what is that in percentage terms?
Roughly about 16,000. Percentage terms, that should be, if you're looking quarterly annualized, that will be 20% approximately. 18 to 20%, we can say.
Okay. So we got a consensus number of attrition number of about 15%. If that was the number, you would be happy.
That's what I'm saying.
Okay.
I'm saying below, so we are looking at, below 14-15%, we should be happy.
Okay.
About that, about 18%, we'd be worried.
Okay. Ravi, TCS has...
We actually prefer inputs at the stage purely on valuation terms.
Okay, that is actually my next question. What do you prefer? But since you did mention that you prefer emphasis, I was asking you, TCS has sort of missed street estimates for 3 quarters now. So there is a bit of a confidence issue in a lot of investors as well. If they miss the expectations this time as well, then how would you see that getting factored into the stock? Because the stock has not performed at all this year. It's absolutely flat.
So I think that expectations have been elevated. If you look at last year, their performance was very good. It was just that expectations were far higher than what they really delivered. Because the first quarter and the second quarter were both outstanding. But the second quarter, despite outstanding results, they disappointed because expectations were ahead of them. I believe expectations have to be toned down to realistic levels, and I believe that will get reflected in the stock price too. That's why stock has not performed over the last 6 months or so. And I expect that a little more derating can happen if they disappoint this quarter. That's why we're expecting a re-rating of Infosys and a slight fee compression. We expect the valuation multiples to both to converge as growth converges and margins converge over this year.
Okay. Well, you're right in saying that the stock has not at all performed, and there have been other negatives also surrounding so many profit warnings from the mid-cap guys, Gartner saying that people are not going to invest much this year in software projects. In the light of all this, do you think that an inline number is factored in? I mean, if instead of 3.5 it came in at say 4%, which is the consensus revenue, dollar revenue number, how is the stock likely to react?
If it's a 4%, I don't believe that there is going to be much upside because there is no positive surprise there. Stock could be up marginally 1-2%, just because I don't expect a dramatic improvement or a significant re-rating. Because you must remember that this is already being given the best valuations among its peer group. So hardly any room to improve on the valuations front. And people will not do earnings upgrades either if it's an inline number.
Okay. What will you want to hear from the management, Ravi? What will be the 1, 2, 3 sentences?
So one would be the most keenly watched would be attrition. I'd like to see what they're doing on that front. Second would be, are they seeing increased competition in the U.S. after the Capgemini deal with iGate and Atos acquiring Xerox ITO? So if deal momentum is strong in the U.S., if they actually, BFSI, they've been strong and traditionally, if we hear of BFSI spending starting to pick up, I think that would be a great positive for TCS. So those would be things that I'd look out for, and energy and the diligent unit kind of bottoming out.
Okay. It's interesting, I heard you mention that you preferred Infosys to TCS. What are the positive triggers lined up for Infosys? What is the expectation from earnings and what's your target price?
So the expectations in earnings, we think on this quarter, we are looking at 3.2% dollar revenue growth for Infosys versus 3.3% from TCS. So essentially a convergence and growth starting to happen. And margins too, we expect will start to converge. We're expecting a margin improvement for Infosys this quarter. So we're looking at margins for the full year for TCS to be at 29.4% EBITDA and 29% for Infosys. And growth to be 6.8% in dollar terms for Infosys versus 7.8% for TCS. And given the 28% valuation differential in PE terms between TCS and Infosys, we think that is really not justified with this convergence. So that's how we see it.
You don't, I asked you what will you want to hear from the management. I thought you would be telling us about the brave new areas you're getting into. Artificial intelligence, so much has been reported about them putting their might behind those projects, as well the other areas, the usual digital analytics, big data. Are these not areas where you want to hear from the management in terms of future growth?
So that is actually a multi-year thing, right? I mean, they've already shared that strategy with us in the past too. So I would really not want to hear some more detail about that. Maybe examples of some client proof of concepts would be great to show that these are things that people are actually putting to work. That would be good. That would mean that we would probably get to see revenue from that sooner than later. So that would be good, like you said. But I think these are more long term.
Okay.
All right, we'll leave it at that. Thanks, Ravi. We won't have to wait too long to find out what TCS delivers. So we'll touch base with you again once that takes place. Interesting observation there. He expects the growth of Infosys and TCS to converge this quarter, both revenues and in margins. So there's no justification for such a big valuation gap, and that's why he prefers Infosys over TCS. Would be a very interesting quarter to see what these companies deliver. But